Hello and welcome to Pro Trader Strategies Market Commentary for Monday, November the 30th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that comes in to impact the markets with some of my market analysis. And I'm going to do the same thing for you folks out there, but I'm going to go a little bit further and layer on some option strategies that I implement into my portfolio on any given day based on those market assumptions. Now, for you all, those option strategies can be a little bit intimidating. So what I've done is streamline the process for you to find the right option strategy for any given assumption. We look at the internals of that underlying, and we have figured out the right strategy for any environment around that underlying you might be trading. So please check those out at protraderstrategies.com. Also, let's get on with the economic data. I got a couple of things I want to talk about, but we'll hit it as we go along here. Across the pond, not really a whole lot of economic data here in the United States. Mondays usually being pretty light, but we did get some economic data here in the United States. And we got it in the form of Chicago PMI. Coming in at 58.2. Anything above 50 is expansion in the economy. Now, remember, PMI is Purchasing Managers Index, so that's forward-looking. Those are the ones we really like to check out because we don't care about what we've already known and seen, right? This is something that is forward-looking, so we check it out. But, yeah, it came in lower than expected. It was supposed to be 59.4, so the overall market getting a bit of bearish tone based on the Chicago PMI. And then we further go in a little bit later and got our pending home sales. Now, one thing to keep in mind is we've talked about these pending home sales, new home sales, existing home sales, all have been knocking it out of the park because of lower interest rates. And that's been driving people to buy houses. Well, what's happened since then? We've seen a lot of people go out, have already done that. Now we're still in this economy that's in flux. New homes, the average home, I think, is $318,000. So that is getting a bit frothy for the average American to be able to buy a house at the median home sale of $318,000. So we've seen interest rates start to rise. I've talked about that. I've said I think interest rates need to come back off again. Well, in this pending home sales number, negative 1.1%, expected to be a positive 1.1%. They did revise last month's number up, albeit slightly, 0.2%, still in negative territory. So really causing the overall markets to follow through with some of this bearish tone that we saw earlier, maybe finding a little bit of a bottom right now. But for the most part, we're really seeing some bearish undertones in the markets, looking a little bit toppy going forward. Something else to note, we've talked about Nikola, which is the hydrogen fuel cell car. They have the Badger, which is this pickup truck, I think is the best thing out there. They haven't gone into production. They were going to do a deal with GM. Then the founder of Nikola was said to have been pushing his trucks downhill for videos, which I don't really think is that big of a deal, whatever. That caused a lot of problems. Now GM has backed out of that deal with Nikola, and the Badger is not going to be produced, at least by GM at this point in time, which is a pretty cool truck. All right, so overall markets, let's get to them. We've got crude oil coming off. We did get up there and tried to test that $45 a barrel. That 45.36 is what I've been talking about. We settled above there last week. And then today starting to peel back down into the area where I would say is the point of control, the value area where the most time and volume has been spent. I think we need to see some of that pullback here to that point of control. Just a little bit frothy. One reason that's given this a little bit of upside momentum is we've got the OPEC meetings. And the OPEC meetings are going to be really concentrated on supply. All right, they're going to talk about cutting back on supply to try and get this price to move a little bit higher. We're going to have to watch this week and see how those things all shake out. Everybody hanging out in the stairwells, which is, I guess, a thing to do there at the OPEC meetings. All right, so crude oil is coming off just a little bit here as we're moving throughout the day. Gold futures continue to slide. Now, I did cover, I'm sorry, you guys, on Friday, I was a little bit out of sorts and was not able to do the market commentary, but I did do a couple of trades on Friday, so we'll talk about those. With gold breaking down below the 200-day simple moving average there, I got a little bit aggressive and pulled the ripcord on some of my gold trades. Looks like it's actually starting to find a bottom though here tomorrow. Today we'll have to wait for tomorrow to see if we get any confirmation of this move to the upside. And what we would be obviously looking for with this type of doji setup, if it were to finish right here or slightly higher on the day, we would be looking at trying to find a confirmation candle, if you will, for the upside in, I'll just use this pen right here, just get a confirmation. That would start to get me back involved in this GLD trade that I pulled the ripcord on Friday. But I'm going to be looking for some kind of setup like that. That would give me the idea that we're going to start moving back towards that 1900, at least into the 1800s, which I don't think is that heavy of a lift. We are going to have to peel through that 200-day simple moving average, which lines up right here, the simple moving average. That is a key going forward that could act as resistance tomorrow if we start getting that confirmation. But that's what I'm looking for here. I think it's well overdone to the downside. We have found some nice support here in and around this area where we were topping off, I could say. As you can see, like right there, if I drew a pretty dirty line there for the resistance that we've seen right here at around this 1782 area, which we're currently trading around. But that is where we found support. Found it on Friday. It's showing up again. I don't have any Fibonacci's lined up with that as of right now, but you can see it on the chart that the line is kind of holding through there. And I wanted to switch my chart to that. As you can see, that acted as resistance on the way up. That should act as support on the way back down there. And then we move over to the bonds. They're topping out a little bit here, but I do expect this market to want to start migrating even higher. Test the 200-day simple moving average. Yes, we do have a bearish trend here, but we've broken above that 5-day on Friday, which was a nice move. We are at a point of control here. It should calm down maybe a little bit, but I do expect this market to want to continue to migrate a little bit higher, break this high here, and start going back towards that 178 handle, which we are a ways away right now. But with economic data like we've been getting recently, it's not too far-fetched to believe that the bonds are going to start rallying and those interest rates starting to come back off a little bit there. All right, VIX is higher on the day, and what that's kind of expected, right? Because we've talked about the equities having a pretty rough day with the economic data we got in the form of those housing numbers. Those were not good. The Chicago PMI was not good. We'll see it all show up there when those data points were released and seeing the weakness in the overall markets. But we can see here the Dow Jones Industrial Average futures down almost 400 points on the day, 15 ticks shy of that right now. We printed 30,000 a couple of times. It looks like now is the time to start rolling back over to that point of control. All right, NASDAQ. We have an engulfing pattern here. As of right now, we have that engulfing pattern, which kind of supersedes anything else. You can see right here, we've got that red candle completely engulfing right now the green candle, which is a very bearish candlestick setup there. It's going to look like we're going to want to roll back over, test the 78 Fibonacci, which is going to line right up and around here. Okay, so looks like the markets are wanting to come back off just a little bit, especially with coronavirus. I mean, I heard like 1 in 16 people in Montana have coronavirus, so real resurgence around the nation on that as well. One thing that was the silver lining we got today was Moderna coming out with more information on the efficacy of their vaccine, 94% or something like that, and doesn't need the super cold conditions, can last for quite some times, and they can pump these things out quite quickly. Something interesting when we're talking about all these efficacy rates of the coronavirus being above 90%, they're using some new tools or new ways to produce these vaccines that they've come up with. the common cold vaccine is only 50 to 60% efficacy, you guys. So this is pretty amazing news, to be honest. But we still have the NASDAQ off by about 100 points. E-mini S&Ps down 35 points on the day. Coming up on the Fibonacci here that I drew on this topping pattern there. We've broken above that. I'm going to leave it in there because it should act as support now as it acted as a major resistance before. I'm going to leave it in there for a little bit now. And you can see here, overnight we were looking pretty good. Now this overnight sell-off it wasn't really due to anything here in the United States. We didn't get any economic data across the pond, but coming into today, we started getting a little bit ahead of ourselves, thinking bullishness. A lot of people talking about Moderna, and then we got the economic data and some of these COVID numbers popping up, and the overall market just fell flat on its face, as you can see. Getting a bit of a bounce, probably more or less, more so probably the short starting to cover here, giving it a little bit of a support there. All right, so let's talk about a couple of trades that I did on Friday when I just didn't have the wherewithal to probably come on here and shoot a video for you guys. I'm sorry about that. But with that being said, I covered my Lululemon long iron condor. And if you guys remember with that trade, I put it on for the webinar on the long iron condor and how to set that up. And as you can see here, I've gotten the directional move. It's for an outpaced move. We did this on the 19th of September 18th. So right around here we did that video. So you can see we were pretty close to right in around here. All right. So I went in and, like I said, did the long iron condor in the December. We're looking for a big outpaced move in that type of trade. So I went in and bought the 360 puts, sold the, or sorry, scratch that. I bought the 260 puts in there, sold the 230 puts to define that strategy to the downside in case we got a big move to the downside on a reopening trade. More people aren't going to be wearing like shorts, and Lululemons are going to have to be going back to Brooks Brothers and stuff like that to get full suits rather than just the toppers. And so that part of the equation is out of the trade. What I'm looking to do is cover this trade when my short call is breached to the upside. So on the upside wing of this long iron condor, I had bought the 330 calls and sold the 360 calls. All right, so that is where I can make my max profit on this trade. I'm only looking for about a 50% increase here because these long iron condors, you guys, take a long time to work out. I would have to be right there at around that short 360 strike at expiration in order to really capitalize on the full width of that spread minus the debit I paid of $14.15. So I've got on a $30 wide spread. Most I can lose is that $14.15, right? So my max profit on this is $15.85. Well, I'm only looking for a 50% increase in that $14, right? So that puts me at about 21-ish, right? Well, we got up there, hit my short strike of the 360 calls, and that is the trigger to pull the ripcord on this trade, especially as we get closer and closer to expiration. I decided to cover it and got out for a credit of $20.62. So a nice win on that trade. As you can see, we got that outpace move we were looking for. We've gotten a little bit of expansion in volatility, which is what we look for in this trade as well. That helps, believe it or not. And all of those things worked out in my favor. Directionality, volatility, slightly expanding there heading into the earnings, which you can see they have earnings coming out later on this month. Or actually December, which is right around the corner. So out of that trade with that volatility expansion, hitting my short strike, all of those things, trading that like you write it up, to be quite honest. All right, and then the other trade that I did was LULU. We did GLD, and I did GLD in my trading account. If you remember, I was playing this for the gold, and I had gone in and sold. Wait, what did I do here? Let me find it, because for some reason GLD, I had bought some calls in there. There we go. On 1124. 1124 lining up right around in here. I bought some calls. As you guys remember, directionality completely wrong. I thought we were going to find some support here and get a little bit of a bounce. I think that the weakening dollar ahead of stimulus was a pretty sure thing. So I went in and bought the February, bought the 175 calls in there for $3.80. Obviously broken down below that 200-day simple moving average over there in GLD, or sorry, in gold futures. That's obviously going to show up here in GLD, which is the gold ETF. And on that breakdown, I bought it back, or I sold it, got out of it for a loss for $3.05. So I lost 75 cents on that trade, on that move to the downside. Now, if we go over and look at GDX, let's look at GDX, because this is the one, this is the gold miners. And this is the one that I put over there in my IRA. Well, this actually ended up working out a little bit better because you can see we got the volatility expansion since I put it on the 24th. Volatility expanding helped me out here in this trade. And I was able to get out of this one actually for a profit, which is quite nice, obviously. You can get out of a profit when the rest of the market is falling out of bed there. So with this GDX trade, I put it on the 24th, like I said, the same day as I did the GLD trade. So right here on that sell-off, was able to get this trade and bought some 39 calls in there. So I went into the March, bought the 39 calls in there for $1.18. Same thing, looking for expansion because I'm buying an option, right? Long duration volatility affects those longer duration options a little bit more, so taking advantage of that as well. Directional assumption didn't work out quite so well here. Pretty much got a sideways, but that volatility expansion helped me get out for at least a slight profit. So I got out of those March 39 calls for $1.39. Not a huge profit in there, but a profit nonetheless when you're directionally wrong. As far as I'm concerned, that's a win. So was able to peel out of those. And then finally, Tesla is what I did today. Went into Tesla trade and this is running against me, you guys. But on Friday, I came up with this and I was looking at the Friday trade. As we can see here, when we've got this candle, we've got a candle runs like this, right? And then we've got this topping pattern candle. Today, we get the confirmation candle, right? Now it's kind of looking like a wick like that. We did, actually trade a little bit higher than that on that candle, which still is part of the confirmation of this trade as far as I'm concerned, all right? So looks pretty weak. Now we're starting to get this rally back. So this trade is obviously not looking good right now. It's completely turned around since I put this trade on. But in Tesla, I went into the December with only 18 days to go here, right? So I did those with the fast theta decay. We have had volatility expansion today and a couple of days. So I've got high volatility here. I expect that to come out. So all of those things are why I am looking at selling calls in Tesla. So I went into the D's, sold these 720 calls in there for $11.95. So you can clearly get these better than where I got into this trade because it has done pretty much nothing but gone higher since I put this trade on. So you can probably do much better at this point in the day. So those are all the trades that I've done. Friday, did the GLD GDX LULU. Sorry, you guys. I was out of sorts, let's just call it. And then today, I added this Tesla short on the short calls, which, I've sworn off Tesla for quite some time. So I thought it might be a good time to get back in the water. Maybe, maybe not. We'll have to see. So that's all I got for you guys. Other than, if you're watching these, obviously, I've shown you that if we are trading options, there are risks to losing money. And just putting on a trade today, that trade is underwater, so there are risks to trading. Please take a moment to go over this disclaimer. As we are an educational company, I'm not trying to get you guys to limbing off the cliff with me. So know your risks, know your parameters, know your guidelines to trading options. That's it. All right. Other than if you can't take that, Take it easy.